I think this is perhaps a loaded question. I think absolutely there was a vision, but it was a vision. It wasn't a roadmap. It wasn't a how-to guide. It wasn't a this must be done. It was a vision. And if you kind of think about how the global economy has kind of come together to try to map out this vision and bring it to life, I would actually say that we've made huge leaps and bounds into trying to progress that vision. And I think that yes, you're always going to have, let's call them teething pains when you come out with a new technology. And you're always going to have somebody that a bad actor that uses the technology in a way that is not for good. We really should just kind of like look at all of the positive things, especially things like payments, remittances, and non-state currencies. El Salvador accepting Bitcoin as national currency. Would we have thought 5 years ago that a country would actually adopt Bitcoin in terms of scams and thefts? Certainly, we had a lot more in the beginning, but if you plotted the number of scams, the number of thefts, as a ratio of adoption, as a ratio of currencies brought to market, as a ratio of assets under management, I think that you'll see very clearly, and certainly at CoinCover we map this, that the risk and notorious nature has actually reduced dramatically. If you actually dig down into the data, it's becoming safer, and a lot of us are doing an awful lot of work to make it trusted, make it safe, make it reliable. I, for one, am very, very positive and very excited about how far we've come and how far we can go with this.
The transactional throughput on something like Bitcoin is relatively low. So you're talking about 7 to 8 transactions per second. If you look at more modern blockchain technologies, one simple chain that we use a lot of the time, Avalanche, that can do 4,500 transactions per second. So I think the performance is improving over time, and it's only going to continue improving.
Sometimes these transactions do happen 12 a day, 15 a day, 20 a week, 50 a week, not a million a millisecond. So you don't need to be at the speed of Visa. And so the technology is very applicable today. As the technology gets better, it can become faster. But in those use cases, you don't need the speed. The speed is not a deterrent. But what it does do is reduce dramatically the transaction fees and the transaction costs and the operational costs, forcing those operators to reevaluate what they're charging to their consumers, to the actual users of that platform, and what they are keeping themselves in margin. So you're changing the industry, making it more usable from a consumer's perspective. It's faster, it's cheaper, making it potentially more profitable from the financial services providers' perspective if they keep the entire margin, but you're changing it inside out. Blockchain is changing and revolutionizing the way that we move and communicate money to each other. We are seeing successes in what I call the wholesale market. So if it's a bank transacting with a bank, who is the counterparty sending and receiving? Are they authorized? Do they have KYC, know your client, or AML, anti-money laundering clearance? Can we actually send those, send documents or send finance to those counterparties? The process before blockchain was very analog, whether that was paper, phone calls, and that's an excuse, may I put it that way, as a banker, and it's an excuse to charge very high transaction fees, very high leakage fees from the value of the actual transaction taking place. And that's a leakage that goes away to fuel a very different process. It's a process that's governed by people and paper and documents and stamping and authorities. You don't need to take any of the authorization, the regulatory lens away from that. You just need to digitize the process. And that's what blockchain is enabling to do very quickly. And the introduction of blockchain in those processes means that they are speeded up.
But if I give you £1 for every time that people say, oh, blockchain, that's Bitcoin, isn't it? I'd be a very rich woman. So what I would say is there's a fundamental lack of understanding of what the technology actually is and the underlying technology that sits below a blockchain. Cryptography is a very, very well-known technology, and distributed ledger technology has been around since the Roman Empire. So putting those two technologies together and creating something quite special. That technology has fundamental potential to change the way we work, the way we operate, the way we interact, and the way we work together on a whole host of levels. The technology itself is fundamentally sound, but I think people have a lack of understanding about what this technology actually is. So, the predictions for the income that will come from the blockchain industry is $3.1 trillion by 2030. So if you think about that, that's only 8-9 years time. So that's seismic, that's huge.
There are basically lots of different players, hundreds of them, all looking at solving the problem of scalability, having more transactions. And it's still a work in progress. There's teething problems, there's scalability, there's speed. And we're solving those problems in, 3-5 years. It'll be a no question anymore. It'll just work. It's just about where we are in the technology adoption curve, where we are in building it out. But we will get there. I'm absolutely confident. It's just evolution, growing pains.
The law can never keep up with technology. And so the law hasn't kept up with technology, and regulation hasn't kept up with technology. But I think the regulators now are trying to engage with technology businesses to understand better and to engage better and make sure that they regulate in the right way. Because if you don't regulate in the right way, you stymie innovation, and that's a really bad thing, because there's a huge potential global market for blockchain. So if the regulators get it wrong, then they lose massive contributions to GDP. So the regulators have got to get it right, but the law will never be there. It's always behind. So it is a huge challenge.
Regulators are catching up, and they do need to catch up. They're by design not visionaries. They're not creating it. They're catching up with what the market evolution is of these new technologies and how they can be adopted. For a technology to set its stand out and say, we are going to completely overhaul and reshape the delivery of banking and financial systems as we know it at the get-go, was probably a big utopian statement that we're all working towards. I do hope personally that we don't get there, because I fundamentally do believe in the rationale for the right kind of regulation, particularly when it comes to the movement of money. And in effect, what regulation does is secure those deposits, secure those banking deposits you have against the government's balance sheet. And if an individual institution falls over, the consumer must not be put at risk. So an environment where you don't have that kind of insurance or regulation puts consumers at risk. And particularly when you're dealing with those that are most vulnerable in our communities, that is a risk that I think is not acceptable and shouldn't be misrepresented by any organization. We are seeing a lot of that happen in the UK as well as outside the UK, where customers think they're opening a bank account with security and insurance protection by the government. Should something go wrong, they are not protected. And that's where the whole growth of this type of technology is also put at risk because of bad actors.
We embrace regulation, and we look at how we can make cryptocurrency safe. And it's not just about building new, faster, smarter technologies. It's also aligning with regulatory controls such as KYC. And the insurance product that we have, it took us a little while, but we actually consider ourselves like the FSIS or in the US FDIC equivalent for cryptocurrency. And that basically is, we keep your funds safe. We absolutely embrace regulatory controls. It's not just as simple as putting the technologies in place. You still have to make sure you're compliant. You still have to do KYC for the customer. You still have to make sure that even if you've got a mechanism to back up their money, to return their money, that you've got KYC to make sure it's going to the right person. So it's we all have to kind of look at this as collective, in that we look, the technology can't stand alone, just like the regulations can't stand alone. It's a very global economy. Every country essentially has their own regulators, and we also have to think about, well, how this actually works on a global scale, because the US, the SEC might do something that is misaligned with what China is doing or what the UK is doing. And so it will also be a great day when those sort of like regulations get a little bit more aligned, so that we understand collectively, globally, what is the security, what's an investment. It's all up in the air, and right now it's so hard to actually understand where we sit. And I think a lot of people think that we're anti-regulation, and I think a lot of people are actually very pro-regulation. We just want some guidance, want some direction, want some clarity, because pretty much I think most people that I know are happy to play within the rules, but they just need to know what the rules are.
Trying to operate in a global space where there's no regulatory consensus around this, and the regulators in different countries are making different decisions all the time, is very challenging. So that, I think that is stymieing it and is holding people back.
We provide an enterprise platform that's actually blockchain agnostic. So we support at the moment 9 different blockchains with a roadmap to support a number more. And as new blockchains come along and old ones fade into the background, you know, we'll be adopting newer blockchains. So, you know, from our point of view, we can using our technology, we can bridge those different blockchains. So we have a database that connects to 2 blockchains, say, and can merge that data into a single place. So you can transfer the data. You can see the data across multiple blockchains in a single place. Now that obviously is relying on a technology layer above the blockchains themselves. I mean, you can talk about actual protocol level interoperability, but the problem with that is it's the same as the classic it's a classic interoperability problem, right? So every time you want to make one blockchain compatible with another blockchain, you've got to build an adapter between those 2 blockchains. Every time a new blockchain comes along, you've got to build a new adapter. If you work with a bridging technology like Simba's enterprise platform, then you're building against that platform, and then as new blockchains come along and as you want to interact with new blockchains, you're using the adapters within the platform rather than having to write those adapters every time you want to do that compatibility.
We do not see the world where there will be one blockchain environment, but there will not be one blockchain. There'll be blockchains for a use, and those will be multiple. There'll be Ethereum in different shapes and sizes and different colors. There'll be different labels given to them, but we will see an environment of different blockchains, and it's for enterprises in financial services and in other areas to understand that and choose technologies which can help them be future-proofed. We already operate across multiple blockchain networks using our technology. And that's one of the reasons why our clients choose our technology, because they do not want to be restricted to a private application of Ethereum when in the future the public may be available. Today, we're seeing clients start in what they understand, with an understanding that the technology, certainly that we offer, allows them to be future-proofed, which means that tomorrow, if a public blockchain at some part of their data structure, so that what it means is they don't want to put all their data onto a public blockchain, but they may need to put some of it in a particular use case onto a public blockchain, we can enable that. So it could be an oil company receiving credit, having banking facilities. In each case, the bank requires verification and proof of service. Now, if you're providing a loan against an asset, you want to know what that asset is and that it truly exists. If you're providing a loan against supply chain finance, you want to know that that product is making its way towards the customer. Well, hold on. If your client uses blockchain in their supply chain, it is simply a step, a switch almost, to enable that data to be sent to the banking and finance provider. So whether the bank itself wants to adopt blockchain in whatever guise, private, public, the clients that they are banking are already doing so. And we are just one step away from bringing the two together. So that's a very interesting way to look at this.
You can draw the analogy with the original internet, right? So when you first started using the internet, you needed to know about all of the different protocols and how they interacted, and using that was quite arcane. And I think blockchain is the same at the moment. If you're working with blockchain natively, it requires quite a lot of skill, quite a lot of knowledge, and quite a lot of experience. So we provide a way to interact with blockchain in a much more developer-friendly way. So we provide an automatically generated unified web service API to any smart contract. Along with that, we've got a graphical tool for being able to graphically build smart contracts, which means that non-programmers can build smart contracts. Right? You don't need to know about the language that you need, the Solidity language that's used to write smart contracts. You can just use this graphical tool. If you understand your domain, you can build your own smart contracts, deploy them to a blockchain, and off you go. And I think as the sector matures, you will get more and more tools like this that will improve this. That just means that the actual blockchain, the blockchain technology itself, just fades into the background. You don't see that anymore. You're talking to these much simpler and more developer-friendly APIs and tools.
I think the evolution of adding together blockchain and AI is similar really to adding cryptography with DLT. I think it potentially has that much of a dramatic impact. And the reason is, I think it's the perfect combination. So you put blockchain, which is your decentralized encrypted data piece, going back to what Anish was saying about data and trust in data. And then you put that with AI, which is your engine or your brain, which enables data analytics and decision-making from that data set. So you put those two together and it's got this perfect symbiotic relationship. So to encrypt storage of sensitive personal data, you'd use blockchain and AI, and then you can use those data feeds to continually improve and continually learn using AI technology. I think there's huge potential for combining the two because they're both data-driven. So you've got the encryption of data, and then you've got the analytics of data, and you put those two together, it's very, very powerful. So that's a really big challenge because potentially this technology completely disrupts financial systems. So potentially this technology could displace a lot of those long-standing institutions.
I read a statistic, it's about £650,000 per annum in this country to keep one bank branch open. And depending on the type of customer mix you have, it's very unlikely that that is a profitable endeavor. Compare that to a new entity that starts from scratch with a technology platform. It's a completely different evolution.
So you either adopt the technology early and you engage with the tech disruptors that are operating in your market, and you gain advantage there by buying them, which is what a lot of businesses are doing. So there are large corporates buying out tech businesses that can help them make sure that they're still surviving in 10, 15 years' time. And there are others that are putting their head in the sand and being ostriches and ignoring it and just say, well, we'll just continue on market dominance and they won't ever get market traction, or they won't get to where they need to be, and ignoring the problem. And then there's other people that actually are actively engaging in the industry. So Corda, for example, is a consortium of lots of big banks and financial institutions who've built out a permissioned private blockchain. So it's not blockchain in the normal sense of the word, being the decentralized permissionless that we would all know blockchain to be, but in financial services systems, it's a usable system.
Digital identity will be very helpful if there's sort of like a unified way of doing digital identity. So we seem to have seen a lot of different players come up with different solutions. And the thing is that they're just kind of like not interchangeable. So I might need to sign up with a digital identity for one platform, and then there's a different flavor for another platform, and they just kind of like don't cross over. So this is like a really difficult one, because I think personally, I feel that that probably needs to be sort of like government or country led, in that you have probably a national standard for digital identity that then can be used on blockchain. So I think it's a little bit chicken and egg. We sort of need something that's interoperable between different chains, between different countries. And then I think it does unblock a lot of problems.
I like that analogy, a network of networks, whether that's peer-to-peer, that could be an application in it, that's, is that the direction we're heading in? I certainly hope so. There's a long way to go, but you can see that that direction is now becoming more evident. And whether that's in 2 years, 4 years, it's not 10 years, but we're heading in that direction. So yes, in short, networks of networks, and I think they will be blockchain networks, is the direction of travel.